Okay, welcome everyone. We'll start our lesson 2. Today lesson will go through LO2, learning outcome 2. As a couple of you know me, my name Anjum Sathar. If you have any question, please drop me email anjum@ukversity.co.uk. I'll try my best to get back to you as soon as possible. So during our lesson 1, we discuss about Assurance-LO1, and where we discuss about positive and negative assurance, on what basis we can collect the assurance. And lesson 2 today is understand the nature and importance of internal control. So in any organization, control is very important. So always work, planning and control work together. You plan and you control. So control mean corrective action. Control not mean only we penalize the people. We control mean how we can actively and effectively we can improve in future. Yes, why we not according to the plan, where we have a deficiency, where we have a gaps, and how those gaps we can fill it in future. That's the key, is in our lesson today. So previous lesson we discussed about assurance. Does not give the absolute assurance. Auditor give the assurance based on the facts and figures, those nothing came in their attention as a negative. All the account was prepared in line with the accounting and the relevant standards and the law. And audit mean the checking the accuracy in the book of accounts, whatever the information we have, comply with the laws and regulation. Okay, so that's and today is always good to please when we start any activity, it's good to reflect where we are at the moment, how much we know. Are you involved in internal audit before any activity? So that will help us to be more and develop our understanding on those lines. So in internal control and assurance, I guess scale 1 to 10, please. You can write in yourself what we know, what we don't know. Okay, reflect 1 to 10, you're at 5 or 6 or where we are. So component of internal control for both computerized and manual system, with the consideration for control environment, preventative and defective control internal audit. We'll go through assurance risk component of risk model. We'll go through 3 types of audit risk, which is called inherent. The inherent, it can be because if we have an organization such as dealing with let's say with the money or your banking, so we have a inherently, that's there are the risk involved in that. So we have to minimize those risks. In inherent risk, control risk, which is due to the control system, or our system deduction are the risk. So deduction system does not deduct the risk. So that's because at the moment, like we discussed and mentioned in Carillion Construction Company, which is liquidate and went, so it's closed the business because why the pension shortfall, there was a 75 million. There was a problem deduction risk because no one deducted. That's why happened, why this is why audit is not deduct those risks, and what not, or not mentioned in their audit report. So legal responsibility and liability, method of minimizing risk. Risk is a probability of happening something, and we'll try to draw a system to minimize risk. Any business we do, we have to face the risk, but we have to make sure we can minimize those risks. That's the key, which we need to audit engagement and exercising professional judgment. Okay, LO2, we have 4 assessment criteria. Identify the needs of organization having affected. We are living in a competitive world where we have a limited resource. We have to be draw effective system of control. So we have to be draw the SOPs. SOPs means standard operating procedures, and those standard operating procedures we need to be draw in our organization that run effectively organization, so we can use limited resources effectively. Discuss the need of main area of business that's need. So you can look around any business of your choice and think the area is the marketing, is HR, is it credit control we need to be further. So it can be wage, it can be purchasing system, it can be credit control, it can be anything effective control system. So we can look around the various control system. I'll give you little Kaplan Dravian card. Those will help you to be look around these. I'll share with you. Okay, describe the component of internal control, both manual and computerized. So manual, of course, we used to do manually paper-wise, but we are moving towards more computerized environment where we need a control of system, changing the password, what control can be there. Control, internal control are evaluated and conclusion drawn, which we look how we can. And if you want to work towards merit criteria, analyze how internal control mitigate risk. So that's internal, strong internal control will help to pick and minimize the risk. That's which we can look at. So that's we have in this lesson 2.1, 2.2, 2.3 and merit criteria. Internal control is the process, design, implement, and maintain those charged with the governance. So what is the governance? How well you govern? So corporate governance. So every company, if you want to look around, their corporate governance report is good too. So if you download their annual reports, is always explain their financial statements meant by. And if you look within that, you have a corporate governance control, or some company, big company, they publish the separate report is called corporate governance report. Management and other personnel to provide a reasonable assurance about the achievement of entity objective with regard to the reliability of the financial reporting, effective and efficient operation in compliance with the applicable laws and regulation. So laws carry on changing every almost regular basis, and always we need to be make sure you have a system in place. The new legislation should be embedded and included into our control system, and control system should reflect. If you don't reflect it, then of course that can be create a problem. Huh? Okay guys, so we need to look around these. So component of internal control environment. Yes, not anyone can pick the ordering form and write it and fill it. So form need to be controlled. So you have a control environment. Risk assessment. So you have a little assess risk, like in a health and safety point of view. If you in an organization, there are the loose wires. So we need to think about, is a risk there? It can be leads to the big, is a hazard leads to the risk, and that can be financial disaster for organization. So like BP oil spill in American Sea, and the BP CEO of the company went to the committee in American Parliament, and we need to be look around why this we reach at that point where the share price of BP's is drop due to the oil spillage happening within, and that's oil spill throughout the sea. So that area. So we need to be looking on what control system, why this happened, because lesson need to be learned. Control activities, monitoring control. We need to be not all the control relevant to audit risk, but we look around the risk to the material misstatement. Material misstatement, like Tesco, their sale turnover was 180 million, but they shown 220 million. Why 40 plus million is extra in the turnover? We don't have any control, like we have invoices, we have various other control system, but actually not being deducted by the internal audit. So that's a big question mark itself. So if you do something is intentionally, that come under fraud. but other, of course, mistake can happen in the real world. Okay, so ISA, which is called International Standard on Assurance Audit 315, stated that the auditor need to be understand entity internal control. We do weekly reports, we do monthly reports, who is responsible, if we give the credit to somebody, what the process we have SOP. So always good to be draw written SOP, standard operating procedure, and we have the workers should be aware of and trained for it. Five component of internal control: the control environment, the entity risk management system, process information system, control objective, and monitoring controls. The control environment include the governance and management function in our organization, and responsibility accounting is very important. Anybody, any question, please, here? You both, any question, please?
No, I'm okay.
Okay, great. Okay, so we need to look around the elements of control environment. These can be relevant with the editor obtain and understand. So if you're doing audit and you don't know organization, which IT system they use, how, who is the responsible for what sort of activities, is there any segregation of duty? People are saying, oh no, that wasn't in my job, that wasn't in my role. So there should be a clear segregation of duty, who's responsible for what. So that can be person can be accountable for the action. So commitment to the competencies, we can look around the participation by those charged with the corporate governance, because the like Enron and various other, the company is a wonderful company, many years in operation, but is not sustained. So that's, so we can detect the fraud, we can, so compliance procedure need to be. Human resource policies, what is policies of selection? Like not, we selecting based on our liking and disliking, not on the competency, that can be a big issue. So component of internal controls, and then internal control, which we can look around control environment, attitudes, awareness, and action of management, communication, enforcement of integrity and ethical value. What we have, yes, do we are checking all the legal requirement when we recruiting for suppose, commitment to competence. Yes, participation by those charged with the governance, management philosophies, and operating style. We can look around the management structure. We can assign of authorities and responsibilities, and human resource policies like, selection, job descriptions, recruitment, selection, placement, training, development, all come under HR. Risk assessment process. Yes, the process identifying, reporting properly, like in our organization, do we have a whistleblower? Yes, if something wrong, something fishy, something is someone involved in fraud, somebody can whistleblow. Yes, can inform or alert to. That's, which we need to operating properly or keeping well. Like in accounts, we'll say if somebody, you're dealing with the cash and you're making the cash payment is a high risk of. So why doing it? It can be maybe the tax or any other issues can be. So we can look around. Information system consists of infrastructure, physical hardware and software. And those are like, wherever we have a computing system that's secure, is locked. Anyone cannot really modify it. We have a password. What is the password changing policy? How often the password expire? And we need to link with the devices and various other instruments to improve the security. So people, procedures, data, the information system, financial reporting initiative, record, process, and report transactions. Because if the people fade transactions can be huge, we can look around materiality of those. So that's, control activities, policies, and procedures to ensure that management carry out performance review. We have appraisal system after every years of employees or others, because ultimately it's all cost leads to the segregation of duties, who is responsible for what. Yes, monitoring and control, a process of assessing the quality internal control procedures over the time operating to be okay. Anything, because if you want to pick the more example, is always good to say internal control, Kaplan, you can find the chapter of the books. I'll share with you the books in a minute. Okay, I'll share with you the book first, and then just give me 1 minute. I'll share with you in the chat box. So that will help you, so you can download the workbook. You can look around, which is F8 of ACCA, which is about audit and assurance. So I'm sharing with you. Give me 1 minute. That will help you to do some background reading. And last lesson I mentioned, you please set up your account on OpenTuition or go on ACCA website. That will help you to develop your understanding about, and always good to read the article if you want further, if very keen or your role is involved with these issues, it's good to look around, please. Okay, so I'm going to give you a workbook, and that's you have in the chat box. Please, you can download, yes, from the chat box. Can you see? Have you received?
Yeah.
Okay, so for 1 more minute. Okay. So other than that, I will send you the Kaplan VN cards in a minute. Those will also help you to look around the things. One more minute. I will attach this. Okay. This we also use, which is quite relevant to. I'm sending you this one is called Pocket Notes. Huh? It's quite good to. Sorry, I think so. I'm not sure with everyone. Just one. Uh, yeah, those will help you as well to prepare your own. Okay, welcome back. Let's back to the slides. Okay, so statutory requirement by law, the director of the company required by law to keep accounting record with this and disclose with the reasonable accuracy in these affairs. Walkthrough testing involve the detailed tracing one or more transactions through the system and observing the application of. Because of course, audit is not mean you do 100%, you're doing sampling. So you're checking your systems, what are the problem within those, how we can identify those. That's the most important to ensure the system upgrade has been stated, and so the walkthrough editors can be. Once the system is being walked through, the editors can make assessment of the control risk, which will be, we can look around in the following, because they refer the chapter, we can look around in our handouts, the slides. Okay, then we have a test of controls. When you do the test of control, that's a control system, you look inquiry about observation of the control activities. You do inspection of the documents, like we can pick, the watering system that will help, and reperformance of control activity to ensure work correctly. Like we can check it, who issue the invoice, who issue the purchase order. Yes, when the goods being received, who sign it, Yes, we can look around the whole cycle of purchasing or selling. So you can find it each level of segregation of duty. If the one person is responsible for everything, that's the poor control. Yes. So we need to look around the testing of control operating on the specific computer application. In the risk assessment has been shown the control is ineffective. Testing will not be undertaking and may also be insufficient to test the control. If the population consists of few large items, can be tested quickly, substantive test. Yes, few big transaction we can quickly, but we can pick the small transaction. What is a significant or materiality? So couple of, we know the concept of materiality. Materiality mean the significant material. So in accounts, we say materiality effect. So always look around. If you don't care about pennies, you don't make a pound. If too much care about pennies, you don't make a pound. So we need to look around the cost and benefit analysis. If you're every transaction, you're saying where the 10 pence shortfall is, maybe it take you trace the 10 pence. It's take you a while to trace it and it's cost you more than. So you have to look around your system, deduct it and try. But of course, we have to look around to find it because that can lead to be significant if carry on happening in each transaction 10 times. So interim audit will carry on doing, not secretary once a year. So test of control, inquiry, inspection, examination, performance, you can look around. Okay, when we do the revenue system control activities, link back to the risk, sales made to goods credit rating, who are the encouraged to pay promptly, orders are correct and orders are failed. Dispatch and invoicing, all the dispatches are recorded, invoice are correct and the credit notes given is a valid reason, and recording and accounting and credit control transaction are recorded, correct accounts, correct period and irrecoverable bad debts. You know the bad debts in accounts. Anyone IFA debtors don't have the ability to pay. So we have recorded the bad debts and what is the process of irrecoverable being treated as expense is being claimed the VAT if you paid initially, if you depends upon the VAT scheme which you are. So auditors can go and look around these. It can be cost million to the company if we don't have an internal control in place. Ordering and granting credit, segregation. Who is the response? Who's give the authority? We have a number printing order form. We have a correct prices quoted to the customer. We match the order dispatch and order query and dealing with the customer queries. Yes. Test of control reference, authorization, credit limits, and matching the order with the requisition which is requested. So control activities, internal dispatch, invoicing, authorization, examination. So these are the bullet points are you can look around. This is happening in our internal control procedures or not. Those are in place as I detailed. Accounting records and credit control, we can look around again. Recording of duties. Yes, look around the sequence of invoices, matching the cash receipt with the sale invoices because that's a link. If you have a credit sales, you have a sale, you're getting the cash in the future dates, you have to match with it. You gave the invoices. So retention of the customer remittance advice, preparation, checking and receiving the statements. Yes, overdue accounts, authorized write-off, who's doing it? Reconciliation of sales control account. This you couple of you learn about sales ledger control account. What is meant by it? So this is also known as debtors account. This is mean account receivables, and this is linked with sales. So we do sales ledger control account debit and we do sales credit. So we can look around double entry. If you have a sales, either you have received the cash or you have created an account receivable account. Yes. If there is a difference between we can look around why this is the difference, because your sales total figures and the sale ledger control figures, if those were the credit sale, should match it, your overall figures. Yes. So then we can look around sale ledger control account, which is mean total worth of credit sales with sales ledger. What is, because these are we call individual accounts, individual customer, we match them. Yes, sometimes can be contra entries, maybe you have a purchase you're putting in the sale and so on, creative accountant. Yes, test of control will help deduct these things, huh? Okay, then we have internal controls, look around internal good receive. So these are different activities and their control system. We can examine the goods inward, doing it, compare the goods received note, reference supplier invoice, check the supplier invoice, maths, how many quantity times, what was the price, and what records of the good return. If we do, we have credit notes if we return it. Yes, if we already paid it. So who is responsible? Segregation of duties, prompt recording in days, books, comparison with the supplier statements, authorization, reviews, allocation, reconciliation of purchase ledgers with the total balance and procedure for the cutoff. Yes, that's the cutoff dates and the payments. There should be a control. So internal control, you will see wherever, like if we have a cash system control, all money received are bank, not putting in the locker. If we have to make sure those are safe, secure. Yes, all payment are authorized and made. The payments are not made for the twice. So we can pick, and we can look around the test of control these, segregation of duties, safe guard at the post of opening, post of stem, restrictions, we who is responsible. Yeah, agreement of the cash collection to the till rolls, prompt maintenance of record and given. So even you make salaries by cash, so you have to look around who is responsible. Two people sign it, open it, count it, paid it. They have a record being paid, who collected, because sometimes if saying I'll collect your salary on the behalf of some, what system of control we have as an organization. Daily banking, yes, how often you do banking, then is a risk. If you do once a week, once a month, no doubt it save time, but you have a lot of cash, it can be stolen, it can be, what control you have. Yes, lockers, what restriction, how you can make sure that being received, that being counted, that being actual. The payments, yes, check acquisition supported by documentation, authorized signatures, prompt. These are bank and internal control for this. So test of control, the cash is being checked. Yes, it's signed by the authorized signatories, request from the bank. So we can look around the bank book and the cash book is being maintained and reconciliation is happening. So if you're looking the inventory control, yes, inventory means stock. Inventory have three types: raw material, work in progress, finished goods, and that sometimes stock taking can be because the finished goods is a higher value than. And then we can look back to our accounting standard IS2. IS2 is about inventory evaluation. Inventory we record at cost or net realizable value, which is mean the sale value, whichever is a lower, whichever is a lower. So that's the accounting standard that being recorded accordingly. So we need to be make sure. Just give me 1 minute. Okay, guys. So we need to, sorry about. So we need to be make sure inventory system, yes, control objective recording, protection, inventory holding. evaluation of inventory, the test of control should be in place. That's, which will carry on. So please, we need to be make sure we'll go through these tests. Any question from anyone?
No, not me.
Thank you. So internal control, protection, evaluation, inventory holding. Yes, precautions against theft we have in place. Precaution against security over the inventory is held by third party and regular, because if third party's inventory and maybe that company liquidates, yeah, valuation appropriate, and calculation are checks, those we need to be, and condition of the inventory is being reviewed, the waste or the revaluation of inventory is being done according to the standard. Internal control and the test of control, like you can do for the pay, these are all different control. Segregation of the authorization, yes, so you have to look around the pay, you look the timing, the paid being, because that's the huge issue, fake worker in the payroll. There's a lot of company being caught, so you can check insurance number, you can check from HMRC tax being paid, you can do audit for this, yes. And the internal control system deduct reconciliation from the cash and mathematical check, so you can do in, yes, these are all the internal control. Non-current assets registered, that's, we have a separate register for non-current asset, the asset which we can use more than a year's time. Building plant and machinery, there, like we can look around the depreciation, revaluation. IAS 16, which is about the property plant equipment, that's, which we can look around, those being used the standards and it's been the asset being valued. Okay, guys, so is for internal control, the keywords, please remember, is called ECA map. Yes, so that's, authorization, computer control, yes, comparison, arithmetical control being, maintain and review, yes, account reconciliation being, physical control, like CCTVs, and those are in place. Segregation of duties, those have, in place. So that can be, the abbreviation can be used for look around internal and tick the boxes, those are in place or not. There are other assurance which we in learn. So a details can give based on these control system. Reasonable assurance, limited assurance. We never give the absolute insurance. Yes. So is a high level of assurance, limited a low level of insurance. So that's, details carry on. That's we had a discussion in the previous lesson. Uh, Understanding the identity organization environment, which is quite crucial if you do audit, and big nature of the business, and that will help you to be more. Okay, when we'll say audit risk, three types of risk. The risk, audit risk, is the risk that the details stated in the financial statement are fairly presented when they are not. So the financial statement was not fairly presented, but actually being told the financial state. So this is the audit risk. The audit itself is create a risk, not deduct the risk. Risk of material misstatement inherent in the risk that item will be material misstated due to the nature and the context, because asset has the higher value, but the asset being not revalued, and inherently risk is there, like with the gold price and various other assets can be. Okay, so the risk control risk, the entity internal control system not prevent, direct or correct the material misstatement. Deduction, the risk that details will not deduct the material misstatement, they exist in the financial statement. So audit risk, that everything is fairly but actually not. Risk of material statement can be inherent and control, and deduction when audit not being deducted, the risk of from the financial statement, because the financial statement not being updated in line with the accounting standard will come. The editor has no control over the inherent and the control risk that will affect the entity. If the editor primary assessment include the expectation of the control operating effectively control, testing should be undertaken. Assess the adequate accounting systems basis of the financial statement. potential misstatement could be occur, and consider the factor that affect the risk is misstatement design. So you have to look around the test of control, substantial procedures, and the test for control, analytical procedures. So these are all the procedures we can use to minimize the audit risk. Okay, as we discussed earlier, materiality is mean the measure the important items, issues related to the financial statement. Materiality effect, it can be significant. You have look around the timing context. Assessing the materiality will have the editor adjust how many items to be tested, whether you use the sampling technique effective, level of misstatement, like how many percent we have a deficiencies is actually saying, and actually the stock in the warehouse, let's assume, relevance inside the nature and the fact, those have been mentioned and highlighted, and these assessed during the audit owing the changes in the risk assessment procedures and be adopted. So that's which we need to embed. So significant risk required the special audit consideration, fraud risk, because we have here is the fraud being like in Enron, no one really meant highlighted millions pound transaction being just been passed without audited properly. Is the management incentivized, which we can look around? Is there opportunity? Are they yes, rationalize or nationalization realization, sorry, is for frauds? We have, so we need to be look around, discuss the to the financial statement fraud, or evaluating the relevant control, carried out extra procedure, document finding reports, and consider the impact. And then you've been given the link, what we need to do, we need to be make sure uh will when we do assignment, so we can put the reference and the source, so we can use the chapter 8 from the link you've been given, which is about audit and audit control or control system. If you want to find the find the article on control, so just a Google, if you Google it, ACCA article on system of controls, yes, in audit. So that will you can find in Google. If you next to that, if you say PDF format, so you can find in the you can find in the PDF so you can find the in the PDF format. So that's we need to be make sure we do accordingly. Yes, and we do the audit. Any question?
No, thank you for that.
Okay, so that's all today from my end. Is LO2 today we cover is called internal control or control system. That's we went through, and you can pick it and review of the control in your, or just use the observation method we are doing, or you can highlight it yourself as well where we have issues.
Thank you.
Okay, thanks for attending, and hope speak you all tomorrow in our session when we'll go through LO3. And just please background reading you can from the books as well. Thanks for attending, and hope weather is nice and your end will be nice too. And enjoy and stay safe, and speak to you tomorrow. Thank you. Bye bye.
See you tomorrow. Bye.
Oh, thank you.